profit to the people to me means someone like myself can, over time, basically build an investment portfolio that reaps financial benefit to them with, starting from very little.
Hello, everyone, and welcome to Profit to the People, the official podcast of Republic, where we believe you have the power to invest in the future you believe in. I'm your host, Lisa Carmen Wang, and I'll be taking you behind the scenes to meet the team, founders, and investors in our community who share their insights on the future of investing and how they're bringing profit to the people. If you want to learn how to invest, head over to republic.co and follow us on all socials at Join Republic and at Lisa Carmen Wang. Today, I'm here with Scott Graham. He is a portfolio manager with over a decade of experience in the public markets. A public investor by day and a private early stage investor by night and by hobby, he's loved investing since childhood. And today we will be talking about the differences between investing in public markets versus private markets and how you can apply different investment best practices to become a more confident and smarter investor. Scott, welcome to Profit to the People.
Thanks, Lisa.
So to get us started, give us a bit of your background. Where did you come from and how did you get into investing in the first place?
Yeah, sure. So I guess I would kind of label my background as a humble one. My parents kind of working middle class, and really the investing angle came about when my mom had the idea of investing sort of like money that I had received over the course of kind of early childhood birthdays into mutual funds. And really that was kind of in the mid to late 1990s and towards the tech bubble when I was kind of approaching 10, 11, 12, I started paying more attention to that portfolio and markets generally speaking. And that kind of sparked my interest, and through a few twists and turns along the way through high school and college, I ended up finding myself kind of in the public market world via my day job.
Got it. And so that's pretty early that you got your start. What is it about investing that you loved?
Yeah, no, I think kind of ubiquitously through both my childhood and now in both my day job as well as investing hobby on the side, really believing in sort of a vision of the future and having conviction and an idea about how the world is kind of trending and where it's going, and seeing those ideas come to life and kind of be right, so to speak. I think I find the most kind of joy and fulfillment from, having an idea that maybe no one else is thinking about or seeing, and then kind of, whether it's 6 months from now or 2 or 3 years from now, getting kind of confirmation of being right about that thought. So I guess it's partially being right, and also just, obviously the fruits that come of having a good investment are obviously beneficial as well.
Got it. So you got your start in the public markets. Tell us a bit about kind of high level, what are some of the most important things you need to have in terms of being a good and smart public investor?
Yeah, so I think, and I'm not always the perfect example of this, but trying to remove emotion from your investing process, because really in the public markets in particular, you on a daily basis are either feeling really good or really bad potentially. You can have days where you feel like you can't do anything wrong, and then other days where you feel as though you can't do anything right, and really trying to navigate those peaks and valleys by finding a more kind of steady status is best, because you allow yourself to make good decisions as opposed to ones that are being kind of influenced by the emotions you're feeling day to day. So I think that's probably one of the most important lessons that I've learned over time, and really it helps me to kind of keep focus on what I really am believing in and stay true to my process.
I think that's probably the biggest difference with public and private investments, because with the public markets, you see the stock market goes up, it goes down every day. There's something different. But when you're investing in startups, it's really a different type of research and long-term game that you're playing, because you're investing early on, and then you may or may not see returns for another 5-10 years. So the horizon's very different. Tell me about, for you, the differences that you've experienced when you started investing in privates.
Yeah, absolutely. So even in the public markets, there's definitely kind of this roller coaster day to day. But again, if you kind of, the way that I think about public markets tends to be over a 6 to 12 month time frame, and a lot of times what I'm trying to do is figure out where no one else is really thinking or considering a theme or a trend, or just ignoring the value of something and believing that will change over kind of that time frame. And obviously timing is very important for how you're able to manage kind of your emotions and the profit or loss associated with that idea. But kind of sticking to the conviction and believing in it over time tends to, on average, work out for me. And I think when you kind of apply that to private markets versus public, like first of all, in public markets, you want to have a diversified portfolio. You want to have a handful or more of ideas, so that if you are wrong about something, which happens to everyone, there's other ideas that are right, that are kind of offsetting it or balancing that out. But kind of for private markets, that applies as well, because there are certainly in the private world, to your point, you might not be proven right for 5 to 10 to 15 years. And along the way, there's going to be peaks and valleys and times where you're wrong about something. So, diversifying your investments, but also kind of like sticking to your conviction about maybe it's an industry or a particular company, or a founder or set of founders that you believe in, even if they go through near-term failures and have to pivot in their own businesses. Those are kind of the themes that I think overlap from public to private markets.
So I think that there's a temptation on the public side, because you can sell, right? You can sell when things are going wrong, but you obviously in the private markets, you can't. Like once you've invested, you're invested. So what kind of research do you do to really build up your conviction when you are investing in the public markets?
I mean, for public market investments, just sort of, I focus kind of in particular industries that I know very well, that I know better than kind of the average investor. I try to do very deep dives, so to speak, on the companies that I'm most focused on and investing the most dollars in, and try to, both through their public disclosures and, meeting with the companies, speaking to the management teams at the companies. Those are all kind of the main processes that I utilize to kind of develop theses around companies and their public securities. And that kind of overlaps and helps with how I think about private markets as well.
Well, because the other thing is, as you mentioned, like the things that they publicly have to disclose, like startups, especially early stage, they don't have any of those public disclosures, right? It's just the pitch deck and what they present. And also, I think on the public side, there's the historical trends. You can look back and see what has happened. Early stage, they're like the startups, they're just starting. So walk me through some of the differences in how you do research on the public versus the private.
Yeah, sure. I mean, for public, to your point, there's definitely a lot more readily available, and certainly there's more of a history with the companies and stock performance. And a lot of times you're actually attempting to take advantage of dislocations that have occurred in the valuation of companies due to someone else not managing their emotions perfectly. whether that be, like selling something aggressively because, a piece of news scared someone or, something along those lines. From a private market perspective, I don't know that that type of research is easily applicable to the private sphere, particularly in early stage investing. But the idea of diversification, I think, is one that has really like kind of overlapped for me from public to private. But for me in the private and early stage investing world, I just try to think more kind of on macro terms, which is something that I do for public market investing all the time. But thinking about the world we live in and where I believe the world is going over a 5, 10, 15-year time frame, whether that has to do with markets or just generally with, social media trends or, how you power your home or what type of assets are going to be part of your bank account, 10 years from now. Those are all kind of the themes and things that I think about when I'm looking at investments on the private side and really trying to have a convicted vision about where I think the world will be 5, 10, 15 years from now.
You are a professional public investor, but for people who are coming in and they're like, I want to put some money in public, I want to put some money in private, and they're just doing it recreationally. How do you think people should think about their portfolio, like first and foremost, in terms of like percentage in public and percentage in private, and then we can dive into the specifics of the private?
Yeah, it's a great question. And it's a tricky one that has like a number of nuances because, when I take a step back and think about how kind of returns or expected returns work for any asset class, a lot of it is being driven by, what central bank policy is, where we are in an economic cycle, which kind of interplays with central bank policy. But there's times when public market valuations get super cheap or super rich, meaning they're very expensive to invest in public markets relative to historical levels, or very cheap. And I think that also plays into private market valuations, which, you kind of want to attempt to compare and contrast, but understanding kind of where we are in kind of a banking cycle from a monetary policy standpoint, and also just kind of in the economic cycle. Obviously we've just gone through a massive global pandemic and the world came to a standstill, but now we're coming out of that, and economic growth is plateauing at the moment, I guess, but really was booming 3 to 6 months ago. So it's definitely tricky, and you have to read a lot and try to learn as much as you can. Use a sponge or be a sponge to kind of learn everything that you can from various sources. But those are kind of the interplay that you want to try and figure out.
So then can you give us maybe a specific example of how you applied that thought process to one of your startup investments?
Absolutely. Yeah. So really like my first foray or attempt to, when I first started private investing and early stage investing, I was a novice like anyone else. I'd never put a single dollar of my own money into any private investments. And this was, half a decade or more ago. And really the reason that I decided to look into it was kind of twofold. I had a few contacts who were involved in the private investing sphere, but I'd also kind of arrived at a place where I thought public markets had become too expensive and didn't necessarily want all of my money exposed to public markets at that point in time. So I tried to find better investing alternatives. And that was really what drove me into looking at the private markets. My first few honestly, the first few companies that I looked at private investing were more just things that I loved to do, or somehow had kind of like a personal connection with. One industry was kind of the sports, online betting and gaming industry early on, kind of as there was regulatory momentum to make gambling legal in the US, which is kind of slowly coming to fruition. One of them was a fitness studio, which had significant growth plans. Kind of crypto, and companies that were focusing on or trying to take advantage of the opportunities of the crypto world. Those are the type of things that were catching my attention from various news sources or just my own personal kind of connection with them. And that drove me to first kind of start to look at them and find companies and management teams that, or founders really is the best way to refer to them in the private world, that I believed in and thought had a vision that could really like bear itself out over time.
So that's really cool. And then, so those companies kind of sparked your interest. What further research did you do or questions did you ask to feel confident and have enough conviction to go for it?
Yeah. So to your point earlier, there's never necessarily a ton of information that you're able to kind of digest from early stage companies, largely because they don't have a long track record of operations, or they're really just kind of putting an idea to paper and really starting to push forward on that idea. The thing that has always kind of, and it doesn't just apply to private investing, but also to public companies as well. The idea of identifying kind of competitive advantages or barriers to entry that specific companies have relative to current competitors or potentially future competitors, that really kind of grab my attention and make me more interested in investing in a certain company. And those can, kind of materialize in either being kind of the management teams, the founders themselves have a particular kind of personality or wherewithal about them that I just believe in and really trust that they are going to push themselves and their teams to kind of capture the opportunity that they see in front of them. Or it can be kind of more hard and fast, barriers to entry, whether it's patents or IP protection or, certain regulatory, licenses or stuff along those lines that kind of really create a niche advantage for the companies that you're interested in investing with.
Got it. And so how many companies have you invested in to date on the private side?
I would say that it's, between 10 and 20 individual companies, but I also invest in, venture capital funds that obviously are deploying capital in many more companies than just that. So a lot of times for those funds, I'm looking at specific kind of industries potentially that I think are kind of cutting edge or have a particular opportunity to disrupt current industries. But then, with the individual companies, a lot of times what I'm most focused on are the management teams, the founders themselves, and also kind of that competitive advantage or barrier that kind of makes a particular company unique relative to others that they might compete against eventually.
Got it. So then in terms of those specific industries that you mentioned, niche industries with the funds, what are some of the industries that you are bullish on?
Yeah, so sports gaming, for sure. I think we're kind of at the the leading edge of kind of a 5 to 10 year, double digit kind of revenue CAGR for that industry. I mean, obviously over the past couple of years, it's become kind of very much in vogue and in focus for both public and private investing. Crypto obviously is one that I think there's tremendous potential, not necessarily just in the coins, but companies that are looking to help folks kind of facilitate investing in crypto. Kind of just the world of the energy transition. One of the kind of economies that we rely on is still kind of the energy industry, and there are many processes that are taking place to kind of improve the emissions of that industry and make it more green, and companies that are involved in that. Some of the older companies are involved in that, but there are new companies as well that are trying to create new technologies that will improve kind of global emissions and help climate change. Kind of social media, new kind of tangents or kind of businesses that are evolving from the evolution of social media. And then, fintech, generally speaking, I think is another industry where there probably hasn't been as much disruption in finance as some other industries that will likely accelerate over time. And I think those are kind of the main ones that I'm most focused on.
Yeah, I mean, those are all very big and very disruptive industries. So I think when we talk about access and profit to the people, those are some of the kind of key areas where more people being able to have access to them would make a significant difference in the fintech space and the energy space.
Definitely.
When you think about just your career as an investor, what are some of the biggest mistakes and most important lessons you've learned from investments that didn't work or didn't yield the returns that you wanted?
First of all, kind of the idea of diversification is huge, because whether you're a novice or someone who's kind of getting up to speed with investing or a professional investor, you make mistakes. And you're going to make investments that lose money. You're going to make investments in the private world that are worth nothing. I've had a number of investments that have done that. At the end of the day, you kind of have to approach investing with kind of the higher level premise that it's okay to be wrong sometimes, to kind of push through that feeling of failure and your inability to get something right, and kind of realize that just like anything else in life, you go through kind of peaks and valleys, and managing to kind of smooth those out is really important. But diversifying, obviously, not putting all your eggs into one basket, but kind of spreading them around so that if you do take some lumps here and there, there's going to be offsets for other investments that will more than offset ones that don't work out. So it's kind of that kind of continuous belief in yourself to, if you put in the time and effort to research something and understand why you believe in it and have a vision around why it's going to succeed over time, your process might not work every single time, but trusting that it will, if you kind of spread it across a number of different investments and instances of kind of putting money to work, that it will reap rewards over the longer term.
Definitely. And I think one other big difference from, call it an average investor who's investing in public and private, is that on the public market, you might be using your app and investing in a few stocks, but when you're investing in startups, there's actually an opportunity to add value to the founders. And so when you think about your value add, that social value? What is it that you bring or have brought to the founders you've invested in?
Yeah, it's really funny because my day job really just does not overlap at all for the most part with what I do, kind of with my hobby of investing in early stage companies. And you would think that there's really no way for me to help the founders at all. But what I've found over time, honestly, is like one of my favorite aspects of early stage investing is developing that relationship with the founders that you're investing alongside with, and also you're investing in them, in my opinion, and being able to collaborate with them. And even for some founders who really, I have gone years without connecting with them at all, and they've achieved significant success in some instances. And sometimes you'll reach out and just say, like, you guys are doing an awesome job. Super proud of you. You might have no idea who I am, but here's who I am and what I do and how I think about the world. And like, if there's ever anything that I can do to help you, you'd be surprised how, sometimes the most random thing that you have in your life, that you have exposure to or have the ability to connect someone with, or your network, your friends, there's always something that kind of allows you to help founders out, and really kind of the appreciation that founders often have when you are able to collaborate and help them, even if it's with the smallest thing, is always, it's a very satisfying feeling to kind of be, you're part of the team, essentially.
Yeah. And I think that's something to just really highlight, is that anyone who invests in startups, like, there is an opportunity to share value, even if you think that you don't have any specific skills that could be helpful. But yeah, it's like even your network, your passions, like little things can make such a big difference, especially at an early stage for a startup.
Absolutely. I think it's one of the great aspects of Republic too, is just kind of your connectivity, not just with the founders when you do make investments on Republic, but also with the community of investors that also share kind of your belief system and how a certain company might change the future over time. It's a really powerful thing to be a part of that type of community that's kind of allowing the vision of those companies to come to fruition.
Mm. Have you had an opportunity to meet or connect with those other investors in the community?
I would say that on the community itself, it's more like me reading what other people think about when they're investing in certain companies necessarily than me directly interacting with them. And obviously, like, that's something, Ken and team, I feel like, always think of ways to improve Republic, and I'm sure they'll probably do something to enliven that process where investors are interacting with each other more and more. But the thing that's really great, I think, is that the majority of companies that I've invested in on Republic, the founders will reach out to you almost immediately after you've kind of allocated an investment with them, and will thank you for it, number one. And oftentimes you are able to respond to that thanks and, spark a conversation. So it's a profit to the people, and the Republic vision is really one that I strongly believe in, kind of on the early stage investing front.
Awesome. So that leads beautifully into our final question, which is, what does profit to the people mean to you?
So similar to, I think, Ken's vision and idea of profit to the people, I come from a family that really had nothing when you compare it to the world that I now find myself in from an investment and finance perspective. We had a loving family, and one that kind of focused on discipline and work ethic, and really kind of pushing oneself to kind of capture opportunities as they made themselves available. But profit to the people, to me, means someone like myself can, over time, basically build an investment portfolio that reaps financial benefit to them with, starting from very little. It's the ability to kind of invest in your vision, believe in yourself, and kind of plant seeds that grow into, rewards over time.
Well, thank you so much, Scott, for being an investor, being a contributor, and just being part of our Republic family. Thank you again for being part of Profit to the People.
Thank you, Lisa.
This podcast is provided for educational purposes only by Republic and Republic.co. Nothing discussed should be construed as legal, tax, accounting, or investment advice. The views of the presenters may not be the views of Republic and its affiliates. Always consult with trusted professional advisors before making investments. Private investments are inherently illiquid and may result in a total loss. All rights reserved.